Hello, everyone. Welcome back to Navellier Market Buzz, episode 21. I'm Crystal Navellier, and I'm joined again this week with my father, Louie Navellier. And we also have again Jason Bodner, the co-founder of Map Signals. Welcome back, everyone. If you didn't get a chance to watch our latest episode, it's earnings season, and each week Louie and Jason will be discussing a new round of stocks for their earning announcement season. So with this week, let's start out with Netflix. What are you guys thinking about their stock?
Well, their sales are forecast to be up 14.5%, which is very good. Earnings are supposed to be up 99.4%. Obviously, we have the family passcode crackdown underway. That's still working. And they're also generating a lot of shows people want to watch. Their guidance will also be crucial. I'm pretty positive on Netflix. I don't have it in the managed accounts, but your mom owns it. So therefore, it has to go up.
Huh. Um, I, I agree with Louis. Guidance is crucial. You know, we're seeing 1 year sales and earnings estimates up double-digit percent, which is great. One thing I did this week is I went ahead and I looked at the past 8 prior earnings reports for all of these stocks. And what we want to see is a pattern of consistent earnings beats and revenue beats, obviously coupled with guidance that's going to make the stock go up higher. But Netflix beat earnings 75% of the time, the last 8 reports, and 62.5% of the time sales. So, you know, this is a great grower, great 3 year sales and earnings growth, and a rich profit margin. I'm excited to see what happens.
Now, how about DR Horton Incorporation? They had a miss this previous quarter.
Yeah, their sales are forecast to be down 8.5%. The earnings are forecast to be down 16.5%. There are some recent analyst cuts, and as you pointed out, they missed in the previous quarter. So their guidance will be crucial. The home builders are doing the best with the luxury home builders like Toll, but DR Horton makes homes for the masses, and they seem to be struggling with the higher mortgage rates and the lackluster housing market.
Yeah, we do see some really strong 3 year sales and earnings growth for DR Horton, but the 1 year has slowed significantly down to low single-digit percent. So it will be interesting to see what they are going to report. They do have a very nice profit margin, 13% for a large home builder, and they're not carrying a ton of debt. You know, on the earnings beat side, they beat earnings 75% of the time, the last 8 earnings reports. That's basically the last 2 years. And they beat revenue 87.5%. But it really, really matters what they foresee the housing market to be and where rates are going to go. And obviously, there's a lot of sensitivity and reactivity to people's perception of where the interest rate market's going to go. So it's going to be closely tied to their views on that.
Now, Procter and Gamble Company, what are your expectations for them?
Sales are supposed to be up only 0.7%. Earnings are only supposed to be up 1.2%. I mean, they've had minor analyst cuts. Here's the deal. The dollar is very strong. Half the sales of the S&P come from outside of America. Procter and Gamble is a classic example of a stock that can have what we call a currency headwind. So I think their guidance is going to be very, very important, and they want to explain how they can succeed despite a strong dollar. And of course, outside of America, there is a recession out there. So, Europe's in a recession, New Zealand, Australia, there's a lot of countries in recession, Canada. So this hurts their sales. So they have to explain that and how they can overcome that.
Yeah, to Louis's point, 1 year sales and earnings growth at 2% each, 3 year sales and earnings growth at 3% each. So, you know, this is a cash cow. It's a dominant company in terms of consumer products, but there's no real growth. So if we see anything along the lines of a miss, plus, hey, we're worried about, you know, the currency headwinds that Louis just mentioned, that could be a significant driver against the stock price. So it'll be really interesting to see what happens there. They do have a very nice history of beating earnings estimates 100% of the time, 8 for 8. However, they only beat sales 62.5%. So that's where I'm going to keep my eyes on Procter and Gamble.
Now, what are your thoughts on Abbott Laboratories?
Well, their sales are supposed to be up 7.7%. Earnings are supposed to be up 12.8, but their guidance will be crucial. This is another example of a big multinational where the dollar could impede their bottom line results. So I want to see good guidance from these multinationals.
Yeah, healthcare as a sector is facing a lot of headwinds right now. A lot of the sector has been underwater for much of the last year, and it's not particularly starting off 2025 very well. So Abbott Labs is right in there, big pharmaceutical maker, diagnostics. 1 year sales growth is -8%, and 1 year earnings growth is -17%. So their forecasted sales and earnings were for 10% earnings growth and 7.1 sales growth for next year. It'll be really interesting this last quarter to see if they're going to start chipping away at that. And as Louie mentioned, they also have that multinational potential headwind from currency. So it really, so many of these stocks, like Louie said, just come down to forward guidance. Companies can even miss, but if they're rosy in their forward-looking guidance statement, you can expect the share price to zoom. So it's really going to be essential here what they do.
So now what are your expectations for ServiceNow Incorporation?
Well, their sales are supposed to be up 21.5%. Earnings are supposed to be up 17.4. Their guidance is going to be very important. This is a bellwether in the tech industry, and they do have a decent surprise history. But I want them to guide higher and lift all the techs higher.
Yeah, ServiceNow is one I own in a managed account. It's been a huge behemoth tech grower. It scores very well in my system, very strong fundamentally, and that's because of its massive 1 year sales growth of 24%, but 1 year earnings growth of 426%. The 3 year stats are equally impressive, and it makes a really nice profit margin of 19%. They have a huge history of beating earnings 100% of the time. The past eight earnings reports, they have beat, and they beat 87% of the time in terms of revenue. I'm really interested to see if they keep expanding this profit margin, as it's a relatively new company in terms of being in the limelight for the tech sector. So it'll be really interesting to see that profit margin for ServiceNow.
We mentioned Progressive Corporation last week, but can we get an update on their stock?
Sure, they're going to announce this week their sales are supposed to be up 21.9%. Earnings supposed to be up 19.8. Very positive analyst revisions and guidance. So, but they have to provide good guidance post LA fire. So I'm sure they pay a lot of auto claims. Their homeowners coverage isn't quite as extensive, so I think they look a little stronger than some others right now. We have the stock again under management, so it better go higher.
Yeah, we love Progressive and insurance companies in general. They tend to rate very highly in my system. Progressive also does, getting a 69 rating. It's a little bit lower in the fundamentals than I like to see, and that has to usually do with its debt to equity ratio. But this has been a massive grower as well in terms of insurance premiums. However, they have an annual profit margin, gross profit margin is 6%. So it'll be really interesting to hear the impact statements from their exposure to the LA fires, because I think we've all seen on the news the bulldozers, shoving the cars off the roads to allow emergency vehicles to get through. All those cars carry insurance. So certainly there are Progressive insurance cards in some of those glove boxes. It'll be really interesting to hear what they have to say. They beat earnings 50% of the time the last 2 years, and they beat revenue 62.5% of the time. So I think those exposure statements are critical here.
Yeah, Jason, there was also a video of a gentleman saving his Porsche ST. It's some limited edition Porsche 911. And but he did sacrifice his Tesla. So he left the Tesla behind and ran off in the Porsche ST. Hopefully he made it. Didn't have to leave it on the side of the road.
That's a tough decision to make.
Well, yeah, $300,000 car versus a Tesla. So.
There you go.
Now, what are your predictions for Lam Research Corporation?
Another great bellwether tech. Sales are supposed to be up 14.7%. Earnings supposed to be up 17%. Their guidance will be very important. They're more involved in the overall uh, the ordinary chips that we all use, and they help everybody the semiconductors manufacture. So I'm hoping for upbeat guidance. The chip sector looks pretty good right now.
Yeah, Lamb is one I've owned for years now, maybe even 10 years plus. It habitually scores highly. It has a strong history of beating earnings. Lamb Research has beat earnings and sales estimates 8 out of 8 reports last year. So they have perfect batting average there. What I will say is 1 year sales and earnings growth has been down, but they are forecasted to grow earnings next year, 14.9%, sales 10.1%. Very strong profit margin company. So I'd like to see them returning to growth. It'll be really interesting to hear some of those growth metrics because that's going to potentially power the shares higher.
I'm curious what your thoughts are on Kimberly-Clark Corporation.
Well, this is, of course, Kleenex, and their sales are supposed to be down 2.3%. Earnings are supposed to be down 0.2%. But this stock has a very good earnings surprise history. So their guidance will be crucial, and this is another stock that gets impeded by a strong U.S. dollar. So, we have very low expectations for the stock, but let's hope they can give some decent guidance.
That's sometimes a terrific setup when the expectations are low. And you're looking at Kimberly-Clark. It scores low in my system for both technicals and fundamentals, but especially technical score 32. That is a weak stock. As I mentioned, the healthcare sector in general has been punished. So when everybody's bearish, and if you come out and even slightly surprise or mention something a little bit rosier than expected, that can really have a positive impact on the share price. As Louie mentioned, they have a history of beating earnings 87.5% of the time the past 2 years, but only 37.5% of the time in sales. So it'll be really interesting if they post a sales surprise. I think you can expect really interesting things for this stock.
I also think that Visa Incorporation will be interesting.
Yeah, their sales are supposed to be 8.2%. Earnings are supposed to be up 10.4%. They should surprise. Obviously, consumers are still spending a lot of money, and Visa participates in that. They have no credit risk whatsoever. So the credit risk goes to the banks, and everybody issues the cards. So this is a very good financial stock, and they should provide decent guidance.
Yeah, this is another company I've owned for ages. I love toll taker businesses, and that's all they do. They facilitate charges between banks and consumers and just take a fee. It's a wonderful business. It ranks highly in my system, 72.5 overall score. They have positive 3 year sales and earnings growth and a terrific 54% profit margin with tons of free cash flow. So financially, they're just in great shape. So I would say, and they have a great earnings and sales reporting history of beating sales and earnings 87.5% of the time the past 2 years. I would say even if statements are negative, I would expect short-term profit taking, but mid to long-term rise in the share price because they have such a sound business model. So I'm really interested to see what happens, but I believe in this stock longer term.
Now, I hate to ask this, but any positivity with Intel Corporation?
There's a little because there's a report out that somebody's trying to buy the stock. This is a report on Yahoo Finance that an outfit called Semi-Accurate reported that a quote-unquote mystery company is trying to acquire Intel. So that is very vague and ambiguous, and the stock did pop almost 9% on Friday. But hopefully they have some more details on that. Otherwise, it might come crashing back down because their sales are supposed to be down 10.2%. Their earnings are supposed to be down 79.9%. They've had huge earnings disappointments in the past 2 quarters. Essentially, what happened to Intel is they were going to help onshore chip manufacturing in America, and they were going to build a big plant in Ohio. close to Columbus, but in the middle of Ohio. And then what happened is the Defense Department reneged on their chip guarantee. They were going to spend $2.5 billion buying semiconductor chips from Intel. So when that reneged, that whole Biden onshoring thing collapsed, and Intel really paid a horrible price for it. So that's a good lesson not to count on the government for your business.
Yeah, Intel is a pretty poor ranking stock in my system, both for technicals and fundamentals. Ranks at 27.5 overall. I mean, just about negative in every category. 1 and 3 year sales and earnings growth negative. They managed to eke out a gross profit margin of 3%, but I can't imagine it's going to stay that way for long, with tons of downward pressure in terms of estimates. 1 year earnings estimates are slated to be down 775%, if you can imagine that. They're levered, they have debt, they don't have a ton of free cash flow. There's really nothing going right for Intel right now. With that said, all this negativity in the absence of that report that Louie mentioned, if there isn't any sort of corroboration or positivity, I do expect this stock to revert lower. But if they come out with anything positive in terms of earnings, this stock is so hated already. It might be interesting to see as a pop, but don't take that to mean a turnaround story either.
Hold on here.
What are your expectations for KLA Corporation?
Well, this is another bellwether in the semiconductor area. This is, of course, they sell equipment to manufacture chips and all, but their sales are supposed to be up 18.6%. Earnings supposed to be up 26.5%. They have a very good earnings surprise history. So I'm counting on KLAC as well as Lam to kind of lift the whole semiconductor industry.
Yeah, Louie, you talk about that sales and earnings surprise history. Perfect batting average the past 2 years. Past 8 reports, they beat sales and earnings 8 out of 8. This company ranks very highly. I do hold it in some publishing portfolios. KLA Corporation. 1 year sales and earnings growth have been negative, but that's coming off of a huge boom cycle. So I'd be interesting to see those growth metrics there. They are estimated to grow earnings 5.9% over the next 12 months and sales 4.8%. So if we start chipping away at that negative growth, that's going to be a nice tailwind for this stock. Makes a nice profit margin. All eyes on that, but a great business, great surprise history. I think good things are ahead for KLA.
And last but certainly not least, what about Tesla?
Well, that's going to be the biggest news this week. Their sales are supposed to be up 8%. Earnings are supposed to be up 6.9%. They have had positive analyst revisions. As far as vehicle sales go, I think it's just important they continue to dominate the market. Obviously, like BYD dominates in China, Tesla should continue to dominate in the US, and getting rid of the $7,500 tax credit will make them more dominant. The big key with Tesla, what are the operating margins? Their vehicles can start to get a little bit too much inventory and they have to cut prices. They've already done that in the Cybertruck or have incentives, both lease incentives and sales discounts. I think Tesla right now is more about maintaining the operating margins and then continuing to grow its storage business, which is huge. They had the biggest orders ever for storage. The power walls and the big commercial battery facilities. It's interesting. When we were in San Diego, there was some battery facilities in Escondido catch on fire. And one of the biggest ones in California is in Moss Landing, the Monterey area, and that caught on fire. It closed the road. So I guess, I don't know if those are Tesla batteries, but somebody's got to sell more batteries to those big facilities. And Tesla's pretty good at it. Then finally, their self-driving software is huge. And if they get that robotaxi out there, I think the stock will go to a premium. I do not recommend Tesla. It scores good in our system, but I have bought it for clients that has to own it.
I own Tesla. My kids own Tesla. It's got a strong history of sales and earnings growth. A very nice profit margin for a car company of 15%, but probably even more impressive is a very low debt to equity ratio for a car company, just 15%. So they're not heavily levered. Obviously, Elon's in the news with his association with Trump. 1 year earnings estimates to grow 35%, 1 year sales estimates 17.1%. Now, what's really interesting to me, the stock is down 10.5% in 1 month. And I think analysts expect them to miss earnings because if you look, the last 8 times they reported earnings, they've only beat earnings estimates 37.5% of the time. They only beat revenue twice, 25% of the time. So I think the sentiment is baked in that they're going to miss. If they surprise, I see big upside for that stock.
One of our subscribers wanted us to comment on Supermicro Computer.
I'm still very bullish on it. I got into it early. I'm still up a lot in it. Obviously, after it ran up this year, it ran down because of the Hindenburg report, and then their auditor quit. But their auditor will be, they have a new auditor, and they will get those results out soon. But right now, the main reason I like Supermicro, there's no analyst cuts. The analysts are forecasting literally 180.7% sales growth, 119.3% earnings growth. And again, there are no analyst cuts. In fact, I'm looking in the past 60 days, we got positive analyst revisions. So they make the finest rack systems for the AI cooled chips, which are Nvidia's, of course. And they have a huge order backlog. Their founder is Chinese, and he's building up big facilities in Malaysia. So there's a lot of exciting things going on with Supermicro, but let's get the numbers out there and let's get its any allegations against it to be dismissed. Now, Hindenburg, of course, is shutting down, and that is a news for the stock to celebrate.
Yeah, I too have done very well on this stock. We sold it on the way up twice. We still hold the last stub for actually getting paid to hold it in some publishing portfolios. So I still love this stock. The stock does not rate well. It rates 55.2 in my system, and that is totally due to weak technicals. After suffering that fall from grace, especially because of that Hindenburg report, the stock took a technical downturn. But as Louie mentioned, just phenomenal sales and earnings growth. 1 year sales growth at 110%, 1 year earnings growth of 80%. Similar for 3 years. They make a profit margin at 8%. And, they have a massive, this stock is up 1,000% in 5 years. It's obviously a come from nowhere growth story. They are making optimized cloud storage servers for AI applications. There aren't many competitors, and they're green. So they're trying to do it with less impact for the environment. It's a unique product. It's in high demand. They're slated to grow earnings 23% next year, slated to grow sales 21% next year. And they have a history of beating sales and earnings just about 6 out of 8 of the last reports. So I think if you get any positive statements out of this earnings, the stock is so depressed, even though it's recovered some, I think you could have a nice updraft for that stock.
Great. Now let's switch over to some topics in the news. The Treasury bonds are now moderating. Why is that?
We had good inflation data. The main thing that you should be aware of is that the core rate of inflation, although it increased, it was mostly higher gasoline prices. So when they look at the components that go in the PCE, the Fed's favorite inflation indicator, everybody's calculating that that is going to please the Fed, and now rate cuts are back on the table.
Yeah, and I think we just saw a big reversal on that dovish economic data the other day, and the 15th, we saw a huge equity rally. And then on top of it, you have Trump's Secretary of Treasury pick, Scott Bessent, I'm not sure how you pronounce it. He's out there saying, yeah, I envision inflation or CPI closer to 2%. The Fed's long-term goal under the Trump administration had very rosy things to say about the economy.
I believe that inflation will be much closer to the Federal Reserve's target of 2%. And I believe that what we have seen over the past few years is that the bottom two income quintiles have a very different basket of goods and services. So there are two ways. We can either lower cost or we can get real wages up. I would hope that we would be able to do both.
As Louie mentioned, rate cuts are now back on the table, and you saw this big reversal in equity. So when people are putting money into equities, you're going to see bond yields moderate, come back in. I think they rallied, 10-year rallied to a high of 5% just last week. We've already seen it back up into the 470s. So it'll be interesting to see how this continues. But I think the 10-year probably peaked for now.
Yeah, I think the 30-year hit 5, but the 10-year didn't quite get that high. But yeah, the bottom line is bond yields are headed back down, and we're going to get good inflation news, and they're going to be slashing rates in Europe anyway. And as those yields come down, it's going to force our Fed to cut. I'm expecting four Fed rate cuts this year, because I expect the European Central Bank will cut rates another 4 to 5 times.
So why did the short seller Hindenburg Research shut down?
I read his statement. He has 11 employees, and I think they were getting a little bit too loosey-goosey on their shorts. Obviously, when they recommended shorting super micro just before Labor Day, they picked a very illiquid day going into the holiday weekend. The accusation has not proved to be true, okay, that they're inflating their sales. No one has cut their estimates in the analyst community, so I think that was embarrassing for them. But you may also remember they picked on one of our other stocks, Sezzle, SEZL, and it had run up, 1 week it was up 174%, so I think it was up a few 100% this year, and they tried to prick its bubble, but Sezzle just guided higher, and it's had a very good week this week. So I think they're a little embarrassed. They got their tail between their legs. The other thing that's interesting is they commented how when you're always trying to short stocks, it's not healthy, being perpetually negative. So I think they're going into therapy right now.
That was going to be my comment. How long can you be pessimistic for? And it definitely appeals to a certain crowd, but 100 years of stock prices say it's better to be optimistic than pessimistic. So.
And what is the index of leading economic indicators? And also, will Wednesday's announcement be significant?
I don't think it will be significant. This is 10 indicators. They have things in there like the yield curve that are very important. But you may know that the yield curve was inverted for the past few years because Janet Yellen had a hard time with the Treasury auctions. So this has lost its mojo, its relevance. And we had a two-tier economy in America. We had a service recovery, but we had a manufacturing recession. And so I don't think people are paying attention to this anymore. So I think it'll be overshadowed by earnings, and that will be driving the market next week.
How about the existing home sales on Friday?
Well, I think that's still important, but it's more important that rates come down, because when rates were backing up, it was backing up mortgage rates. So any good news on housing is important, because if we get housing turned around, then we get durable goods and manufacturing turned around. There's a lot of durable goods that go into homes. And of course, we have a real estate president effective on Monday. And he's going to not only want to get home sales up, he's going to want to help rebuild LA. And, Gavin Newsom had a kind of a creepy meeting where he was bragging that he was going to have speculators start to bid on the homes and things. And that gave everybody kind of like, again, a bad feeling. So I think we're going to see this Trump-Gavin Newsom fight on how to rebuild LA escalate. But hopefully we'll get some good news on the housing front.
Finally, what do we expect from President Trump's shock and awe after he's sworn in?
Well, this is going to be very exciting. President Trump is all about making America first. He's going to probably have 100+ executive orders to undo a lot of things that Biden just did, including boosting drill baby drill and natural gas. It's going to be fascinating to watch the speed of which he operates. He's a master at distraction. So when he's talking about making Canada a 51st state, or wants to control Greenland or rename the Gulf of Mexico, when he's doing all that, all his appointments, his cabinet's getting appointed. So there's only so much you can cover in the news. And so this guy's going to be moving really, really fast. So it's going to be interesting. I expect the velocity of money to pick up. And that's how fast money changes hands. So we do expect GDP growth to approach 4% as he gets underway. And it's just going to be fun to watch. And hopefully we will get peace between Ukraine and Russia.
Yeah, I think it's really interesting as well. I think we can just look towards the first time he had his first 100 days in office and the swiftness and intensity of executive orders that went through and actually got fulfilled. So like you, Louie, I expect much of the same. That pen is going to be flying all over the place, and he's got a lot of well-appointed people now. I think the benefit of his last administration is he openly admits that he didn't choose very well last time. So I think he's putting a lot more scrutiny into who he appointed, who's getting in line, and he wants the best people, he wants the smartest people, but he also wants people who are aligned with him. So I think it's possible we can even see more of successful changes that he wants to implement even quicker. So it'll be really interesting to see. One thing I can tell you is a lot of people who dislike Trump openly admit was good for my portfolio. He's good for my wallet. He's good for business. So economically, I really do believe he's going to be pushing the strength agenda for America. It might even accelerate faster than the last time he got into office. So
there was a Bloomberg report that he might phase the tariffs in. I think that's a little bit preliminary. I think the tariffs are mostly a negotiation tactic to get countries to do what they want, like to get Canada and Mexico to seal their borders against drugs and illegal immigration and stuff. But I'm pretty sure that the tariffs against China are coming in. China hit almost $1 trillion in trade deficit from their exports. So yeah, China is going to probably have to pay, and we'll see if it kills China's economic growth. China just said they grew at 5%, but no one believes them because they lost 1.39 million people last year. They keep shrinking as a country. And so all their growth seems to be exports, and they seem to have a lot of deflation in China. So that's going to be the most interesting thing. And then hopefully, on Sunday we're supposed to get the hostages are supposed to be released from Gaza before the inauguration. So hopefully that peace agreement holds, and then he can really focus on Ukraine, Russia. But if we get a peace in the world, 5% GDP growth is possible. So it's not sustainable, but it would be fun to get there briefly.
Yeah, I think we would all see inflation in our stock portfolios for sure.
Yeah. No, the U.S. is the king. We're the oasis for the entire world. We're food and energy independent. We're just a more optimistic society. Our 50 states, they compete with each other. We just have a better formula and system than other countries do. We assimilate our immigrants much better. There's a lot to look forward to no matter who we elect. But Trump's probably the most pro-America president we'll ever see in our lifetime. So let's wish him well and see what he can accomplish.
Perfect. Well, thank you so much to you both for answering all my questions. Thank you to you all for liking and subscribing. Once again, if you have any questions, please leave them in the comments below. But until then, we will see you all next week as we go through another round of stocks for their earning announcement season. Thank you so much.